Hello Wolfpack, long time no see. I've got a new setup here. I'm going to get a better place for my camera in the future because obviously I don't like the fact that you guys are all the way up here and I'm all the way down here. But we'll sort that out, and obviously the background's going to get changed as well. But moved into a new house here, and we're ready to get back into Bitcoin today. So what we can see just straight off the bat is the Bitcoin, obviously, as you guys would all know, has had a massive capitulation event, a massive downwards trend, and that's partially due to the fact that Luna has collapsed and UST has collapsed, but it's also due to the fact that USDT has been volatile, which obviously isn't typical, right? It's a stable coin. It shouldn't be seeing volatility in any sense of the word, right? It should literally be as close to $1 or at $1 as humanly possible. But that's why this drop was so pronounced. And I'm on the Binance chart here, and this might look slightly different depending on which chart you guys are looking at, but the Binance chart actually saw our target of 24K play out, right? We reached our target. Our prediction since 60K in November has played out. Congratulations, Wolfpack. We've done it, right? We made it to the target. However, we've made it to the target. We made it to 24K, but we haven't actually made it to the 200-week SMA yet. And that's quite interesting, right? Because the 200-week SMA is actually sitting here at 21.8K. And so although we've made it to our price target, our macro bottom target has not been reached at all. So I have talked about in previous videos that there is a potential for Bitcoin to go down below the 200-week SMA. I still stand by that. I still think there is a chance for Bitcoin to go to as low as 12 to 14K. However, as I've said before, that's speculation until we actually get a reasonable amount of data to prove that that's the case, right? We have a decent amount of data. We have a recession. We have a bear flag. We have the fact that the 4-year cycle doesn't necessarily predict where the bottom is, per se. That's a decent amount of data. But at this point, due to the current trend and due to the fact that Bitcoin has only exclusively bottomed out on the 200-week SMA ever in Bitcoin's price history, that's where it's bottomed on the weekly chart. We have to assume it's going to bottom there again, right? Until it doesn't. And so right now, although we've seen 24K and although our price target has played out, I would say the macro bottom is still not in. I would say we need to go downwards further towards the 21,800, which is where the 200-week SMA actually is currently. And so moving on from this, and we'll come back and swoop around to that point in a second, I have a very compelling chart that suggests that might be happening a lot sooner than some people might think. But I just want to talk about the daily chart first, just briefly, and then the shorter term time frame as well. Now, what we're seeing on the daily chart is all of these breakdowns, obviously from the bear flag and also from descending descending wedge formation. We've extended these descending wedge lines, these dotted yellow lines downwards, so they act as resistance now. And so if we do have an occurrence where Bitcoin does something like this, those lines are going to be acting as resistance in that region, and we might get rejected downwards from them. So we're just going to extend those through, and that's something you can do with descending wedges. Once you break down below them, you can extend those lines downwards. Same thing with triangles. And so that's what we've done there. Now, I know this sounds ridiculous, but we're still actually holding the 30K support zone. Okay, and you might think, well, how are we holding 30K? We've dropped down, towards 24K. That doesn't make any sense. Well, the support zone at 30K, as you can see from January 2021 and also through from May to July 2021, is actually not at 30K. It's sitting between 28.9K and 30K. And as you can see, we haven't seen a daily candle close below that yet. And so it's not a confirmed breakdown. And that's further consolidated in the fact that we're actually bouncing from this region now. So although we had a sharp wick to the downside, that was a capitulation event. It wasn't actually an actual technical analysis drop below a support region. It was just a scam wick. Okay, so we are still holding the 30K support zone. And as per, we need to expect bounces, because when you're on a major support, I know it sounds ridiculous, but when you're on a major support, and when you have the RSI bottomed out, when you have the MACD at the lowest levels we've seen since December, when you have stochastic RSI bottomed out, when you see massive amount of volume that is diminishing quickly, when you see the Bollinger Bands telling us we're incredibly oversold, right? When you're on major support and all those things are happening, you have to expect a bounce, okay? And that's why on Bitcoin, it wouldn't be overly surprising at this point if we do see a bounce. However, there is an argument to be made that there's way too much volatility in the market to try and predict the short-term price action. With that said, let's move on and try to predict the short-term price action. Okay, what we have on Bitcoin in the short term on the hourly chart is actually a descending broadening wedge formation, which obviously is a very bullish formation. And we can see that this descending broadening wedge formation, as per the structure itself, would be targeting around 33K. right? Somewhere around 33K, which obviously is where we actually bottomed out in January. If we zoom back out on this chart, you can see we bottomed out in January at 33K. And so it wouldn't be overly surprising at this point at all if Bitcoin goes for a retest of 33K before anything happens. However, I don't want to put too much emphasis on the short-term price action. Now, before we move into the rest of the video, I want to check out the BitGet Exchange. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box and you will receive up to 153 USD deposited into your account as a reward. Now, let's get into the evidence that Bitcoin isn't bottomed out yet, right? Because some people would say, well, look at that massive wick to the downside. That's obviously a bottom out. That's obviously Bitcoin. It's done. Let's restart the bull market now. That's not necessarily the case at all, okay? What we can see on the monthly chart is that the 21-month EMA is a critical zone. Every time we lose it, we see a massive correction. Every time we jump above it, we see a massive bull market. We lost it in 2015. We lost it in 2018. Massive corrections on both occasions. We're losing it right now, and guess what? We've seen a massive correction. But what I'm more interested on the monthly chart, because that's already played out. That's evidence that was used last week, right? It's already played out now. But what I'm more, interested in the monthly chart is the fact that 44, this red line, you might not be able to see it on because my face camera here, but this is 44 on the RSI, right? What's interesting is that in 2015, we bottomed out at 44 on the RSI. In 2018, we did the same thing, okay? So every macro bear market bottom, the last two that we've had on Bitcoin, has bottomed out on 44 on the monthly RSI. We are currently only at 47 on the monthly RSI, which means we have some room to move downwards further, okay? 47 or 48. So the point is, the monthly RSI bottom, the trend that predicts 44 on two separate occasions, which, by the way, it would be an insane coincidence if that is just a coincidence. It looks like a trend, in my opinion. We're getting very, very close to that. And guess what? That seems to line up with the 200-week SMA, right? So that's evidence to suggest that we haven't quite bottomed out yet. Now, further evidence to suggest we haven't quite bottomed out yet is the fact that we have a very clear trend. And this chart has become so much more important in the last 2 days, right? And I'm going to tell you why. What we have here is the 50-week SMA in red, the 75-week SMA in blue, and the 200-week SMA in green. What you can see is that every time the red line crosses under the blue line, every time historically, okay, we see Bitcoin bottomed out on the 200-week SMA. Okay, happened in 2015, happened in 2018, and guess what, right? This red line is going to be crossing under this blue line in about a week or two, right? And if the trend has anything to say about it, that would mean that we would be at 21.8K or at 22K on the 200-week SMA when that occurs. That's some pretty compelling evidence there as well. And using that to line up with the monthly RSI, it does really seem to point to the fact that Bitcoin is not quite done correcting yet and the bottom is not quite in. Okay, so now let's move forward into something like the total cryptocurrency market cap, which has obviously found support in the May to June lows, May to July lows, and also the January 2021 lows. And you can see that this has bounced massively off support, but we can move further downwards towards the support zone before we get to 200-week SMA. We've got a 10% move downwards to make there. Now, the weird thing about the market right now is that, if we go to 22K, where would these charts like the total cryptocurrency market cap and Ethereum go? Well, the total cryptocurrency market cap is an interesting case because it's kind of on support right now. And so if we went to 22K on Bitcoin, it would be in a free fall. Okay, it would be below that support zone. And that would be extra evidence to suggest, I suppose, that potentially we might be going lower to something like 12K to 14K so we can find support lower on one of these regions here. But at this point, that's just speculation. It's way too early to tell. Ethereum's in the same scenario as Bitcoin where it's broken down from a bear flag formation. It's wicked off some major support and it definitely will be coming down towards that major support zone again as Bitcoin approaches the 200-week SMA, right? So I suppose the major chart that I'm looking at right now is definitely this weekly chart. That is very compelling. And then obviously the monthly RSI is very compelling. So at this point, what would I be expecting on Bitcoin? Well, I'd be expecting some consolidation for an unknown period of time. If the shorter term time frame has anything to say about it, we'd probably be retesting something like 33K. Honestly, it's very hard to tell at this point what's going on for shorter term, but what we can expect is that, and what we can say definitively, right? So don't worry about the short term. What we can say definitively is that if Bitcoin closes a daily candle below 28.9K, that is a sure sign that we're going to be going downwards towards 24K properly, right? With candle closes towards 24K. Now, 24K is a support zone, and so we might see a little bit of retention around there. But ultimately, I think, yes, we're going to be ending up at around the 200-week SMA. And I wouldn't be surprised if that happens within the next month or so, right? And that's just a random kind of throwing it out there time frame. It's very hard to be precise with this kind of thing. But what we can observe is that the last two major corrections after consolidation in bear markets, right? We saw consolidation, major correction, consolidation, major correction. They happen very quickly. And so I would kind of be compelled to believe that this speed, this haste of the trend may be continuing at this point. That's what we can kind of assume here in Bitcoin, right? I don't think that we'll be holding this for months and months and months. I don't think we're going to be seeing another months and months and months long support zone at 30K. I simply think we will be seeing maybe a week. Hard to tell at this point, but I'm just saying that, it wouldn't be illogical to assume that the speed will continue. With that said, we'll probably see a bounce in the short term to reset some of the indicators. We are dramatically oversold at these prices, and so we have seen a capitulation event as well. We usually see some bullish price action after that. So yeah, I wouldn't be surprised to see some bounces here. But we have a very important part of the video regarding interest rates, and then also answering some of your guys' questions. But before we get into that, I want to talk about Wolves of Crypto membership, because we've added something very new to there that needs to be discussed. So if you go to my YouTube page and you click the join button, you'll be able to sign up to become a channel member. We have about 80 members there, so you'd be joining a bunch of wolves. And the reason why I'm talking about this now is because we've actually just released the Holy Bible of Market Psychology, a 2-hour long lecture on market psychology from myself, exclusively to the YouTube members, part of the Wolves of Crypto YouTube channel. And that, honestly, if I'm being completely honest with you, and this is not, BS, that video alone is worth 10x of the monthly price of this course. That is basically teaching you everything you need to know, every single thing you need to know about trading that isn't about trading, right? Market psychology, every trader will tell you if you don't have the right mindset, you're not going to be profitable in trading. On top of all of this, right, on top of that 2-hour video, which honestly is, plenty in itself, you're also going to be receiving 3 to 4 altcoin trading signals per week, which is great. And then I'll prioritize replying to your comments. On top of that, you're getting custom emojis and you're getting loyalty badges next to your name in comments and live chat, so you can show your loyalty to the Wolfpack. Highly recommend you guys join up there. That's a new addition there. I've just dropped it out of nowhere. I'm constantly adding content to this. The Holy Bible of Market Psychology. You're not going to want to miss that one. Let's jump back into Bitcoin. Now, the DXY has pumped upwards, and guess what? We can flip this 5-year-long DXY resistance zone green, because it is now a 5-year-long support. Well, not a 5-year-long, but now it is a support zone. I don't think you understand the magnitude of that, right? We have flipped on the DXY, a 5-year-long resistance zone for support, broken to the upside in a W formation after breaking out of a ascending wedge formation, right? I've told people this is going to happen for months and months and months. A lot of people didn't believe me. Guess what? It's happened. And it is a reflection of the economic state in the USA worsening. Why is that? Because when the US dollar currency index for DXY goes up, it represents people selling their risk on assets for cash, and hence cash gets more valuable against other assets and currencies, right? This is indicative of the recession, the oncoming recession, or the current recession worsening or getting closer and closer and closer. And the higher this goes, the worse it is for Bitcoin, the worse it is for traditional markets. Interest rates, we're not going to talk about in this video, we talk about it every time, are skyrocketing, and they are, according to the bond yields, expected to go up another 1.5% minimum, right? So probably a lot more than that, which obviously will tank for traditional markets even further. And I suppose this is another piece of evidence that kind of leads into the lower price target for Bitcoin at 12 to 14K. The recession's only just beginning. Who's to say Bitcoin's going to bottom out at 22K on 200-week SMA when the recession's only just starting? It's really hard to say where Bitcoin's going to bottom out right now. The TA suggests that it's going to bottom out on the 200-week SMA, but the global economic market, it's harder to predict. But I suppose without further ado, let's just move on to the Wolfpack's questions. Again, if you guys have any questions that you want me to answer in a video, go ahead and chuck them in the comment section below, and I'll be sure to, choose a few of those there that I think are the most compelling. So we've got YSF asking, I like the fact that Bitcoin has never fallen below an all-time high in a previous cycle. If it does this time, then it will make much less desirable for me to hold Bitcoin long-term because I feel like it loses a lot of credibility if that happens. Anyone else feel the same way? So if you guys don't know, Bitcoin has never actually dropped below a previous all-time high, a previous bull market all-time high. All right, so we can see that, delete these lines. The previous bull market all-time high in 2013 was 1,300. We never dropped below that. We never actually touched that again. We actually just went straight above it. In the next bull market, we made a new all-time high and we never touched it again. Same thing in 2018. So right now, if we go below 20K, right, which was the 2018 all-time high, we are breaking that trend of Bitcoin never going below an all-time high before. Now, what I would say to you, my friend, is that I think that this trend will break eventually, whether it be this cycle, which is extremely possible, by the way. Like incredibly possible. Even if we bottom out in a 12-week SMA, the wick alone to the downside, which we do see wicks below 200, would probably break it. I wouldn't be surprised if it breaks this trend. But I think, that is a trend that is destined to break because the higher the market cap of Bitcoin, the lower the bull market all-time highs become, right? As in comparison to the other all-time highs, and hence the closer range you're kind of getting from bull market to bear market. I think that, I think that on paper, it sounds good to say Bitcoin's never going to go below the previous bull market all-time high, but it just doesn't seem logical to me to think that's going to happen. But I can understand how that would make it less desirable to hold Bitcoin. For sure, it makes sense to me. But again, it seems as though that trend is completely unsustainable. And it's not actually a trend yet because it's only happened 2 times. For a trend to form, you need 3 data points. So yeah, don't expect that this goes into this kind of, influencer hopium, right? Don't expect Bitcoin not to break below the previous all-time high just because it didn't do it in the last cycle, okay? It's not logical. Everything's different now. We are still in the 4-year cycle theory, but in terms of diminishing returns, it's all different now. Don't fall for it. That's not a valid reason to buy Bitcoin, right? Buy Bitcoin because you think it's going to bottom out, not because you think it can't break below its all-time high. It's programmed to go up from here. It's not necessarily the case at all. Moving on further. He says, I'll ask you here as well, because I think this is a good question. What time frame should we look at on the charts depending on how long our trade is? 1 minute for a 30 to 45 minute trade, 5 minute for a 2 to 3 hour trade, 15 for daily trades. So this is a good question. What time frame should you use, right? So a general rule of thumb for me, is use all time frames, of course, because if you're trading, even if you're short-term scalp trading, you want to be getting an idea of what's going on all the time frames, right? If you're in a short-term scalp trade, say it's going to last a few hours, you're looking at the 5-minute or 15-minute chart, you still need to know what's going on in the hourly chart, because the 15-minute chart could look all good, but the hourly chart could say that it's completely different, right? Could say it's completely overbought when the 15-minute chart says it's oversold. So, you need to be looking at multiple charts in conjunction with one another. But what I can say is that what I do with the daily chart, right? If I'm going to look at a daily chart, I want to be looking at something that's, been going on for at least 3 months, right? You want to be seeing at least, if you're observing a time frame, there needs to be at least 100 candles on that chart that you're observing. I think that's a good little rule of thumb to use there. So, for example, as of right now, the only valid way to use the daily time frame would be if you're looking at least from February 14th, right? So this would be the minimum you could look at on a daily time frame. That's about 100 candles. Okay. Even with that said, though, you need to be cross-checking between time frames because multiple time frames can tell you multiple different things. Okay. I think that's a good question. Thanks for asking. Moving on. Crypto Academy is launching in 2 days. Right. You have 48 hours to lock in your pre-order discount on the Crypto Academy Become a Trader course, right? If you want to improve your trading abilities, if you want to become a trader, if you want to learn how to trade, learn TA, learn market psychology, learn advanced risk management, you want to be getting into this course, go ahead and chuck us an email at cryptoacademycourses@gmail.com. This is made by myself and Megawell Crypto. Again, 2 days until the pre-order sale ends, 2 days until the course releases. If you wait until the course releases, you'll miss that pre-order sale. So chuck us an email there and lock in your pre-order price. Thanks for watching, guys. Hope you enjoyed the video, and I'll be back in the next one. Cheers.